Welcome to Supernova Stock Watch. I've been investing for a long time, and there's one thing I've learned is that it's not always easy to find good high-yielding stocks. I don't want to invest in a stock that will reduce its dividend multiple times, and I need the share price to at least stay steady if not go up. I believe any dividend stocks with a yield of at least 8% or higher should be looked into more closely because one needs to research the investment thoroughly if it is riskier than other options. Generally, the higher the dividend yield, the riskier it is. Before concluding on anything, it's important to analyze the situation from all angles first. This is true for when investing and also what will happen when interest rates rise. Companies usually know how to handle themselves in most cases, so I'm sure they'll be okay. Now let's look at these 4 top performing high-yield dividend stocks. Coming in number 4 on the list is Owl Rock Capital, ticker ORCC. Owl Rock Capital Corporation is a specialty finance company that provides direct lending solutions to middle-market companies. Analyst rating consensus gives this stock a strong buy rating, with a possible 7.82% upside. Owl Rock Capital Corporation is externally managed by Owl Rock Capital Advisors LLC, an SEC-registered investment advisor, an indirect affiliate of Blue Owl Capital Incorporated. Its subsidiaries are a New York-based direct lending platform with approximately $39.2 billion of assets under management. Its investment strategy focuses primarily on originating and making loans, creating debt, and equity investments in U.S. middle-market companies. They invest in senior secured or unsecured loans, subordinated loans, or mezzanine loans, and, to a lesser extent, equity-related securities and warrants. Looking at their portfolio highlights, their total investment is worth $12.7 billion. They have 143 companies within their portfolio, and 90% of their assets are senior secured. They currently had $632 million in revenue. First lien senior secured consisted of 75%, second secured consisted of 15% of the portfolio. Looking at their geographic diversification, 94% of their portfolio positions are within the United States. The top 3 sectors they are invested heavily into are the internet software and services, insurance and financial services, with all 3 comprising 28% of their diversified portfolio. Looking at dividends and share price, the current dividend yield is 8.27%. They pay dividends every quarter, the last being 31 cents per share, which has been the going rate over the last couple of years. Looking at the number 3 spot is Arbor Realty Trust, ticker ABR. Arbor Realty Trust Incorporated invests in a diversified portfolio of structured finance assets in the multifamily, single-family rental, and commercial real estate markets in the United States. The company operates in 2 segments, structured business and agency business. It primarily invests in bridge and mezzanine loans, including junior participating interests in first mortgages and preferred and direct equity, as well as real estate-related joint ventures, real estate-related notes, and various mortgage-related securities. Analyst rating consensus gives this stock a moderate buy rating, with a possible 10.23% upside. Arbor provides flexible and personalized multifamily and commercial financing to take advantage of the current market. They offer unique features, such as interest-only provisions and the ability to work beyond any transactional or operational challenges to close the loan that works best for an investor. Arbor Realty is an internally managed multifamily-focused REIT, with a unique annuity-based business model creating multiple high-quality long-dated income streams from one investment through diverse product lines. They saw a $16.1 billion in volume within 2021, which represented a 76% increase over their record 2020 volume of $9.1 billion. Their balance sheet originations of $9.7 billion easily set a new annual record. The $9.7 billion is more than 2.5 times their previous record. They currently have $12.2 billion in assets within their portfolio, 97% consisting of bridge loans. Their diversified income streams provide a strong baseline of high-quality predictable earnings. Overall financial performance over the last 5 years has increased every year, with stockholders seeing an annualized average return of 26%. The current dividend yield is 8.06%. They pay dividends every quarter, the last being 37 cents per share. The number 2 spot is Pennant Park Floating Rate Capital Limited, ticker PFLT. Pennant Park is a business development company. It seeks to make secondary direct, debt, equity, and loan investments. The fund seeks to invest through floating rate loans in private or thinly traded or small market cap, public middle market companies. It primarily invests in the United States and, to a limited extent, non-US companies. Analyst rating consensus gives this stock a moderate buy rating, with a possible 11.28% upside. They also invest in equity securities, such as preferred stock, common stock, warrants, or options received. in connection with debt investments or direct investments. It primarily invests between $10 million and $50 million in senior secured loans and mezzanine debt investments. They primarily focus on first lien senior secured floating rate debt. This provides a steady and stable dividend stream for the past 10 years. Over the last year, they have grown their balance sheet by $150 million from $1.08 billion to $1.18 billion. They are intensely focused on 5 sectors that deliver steady and consistent cash flows: business services, consumer, government services, healthcare, and software and technology. They avoid retail, restaurants, airlines, oil and gas, heavy cyclical, and the fashion industries. They also have highly selective in their business dealings. Since they began, they have had over 9,500 potential opportunities but only selected 635 for investment. Over the last 3 years, they have only selected roughly 5.2% of the potential opportunities. The current dividend yield is 8.76%. They pay dividends on a monthly basis, the last being 9.5 cents per share, totaling $1.14 annually. The number 1 spot is Ares Commercial Real Estate Corporation, ticker ACRE. Ares Commercial Real Estate Corporation, a specialty finance company, originates and invests in commercial real estate, CRE, loans and related investments in the United States. The company provides a range of financing solutions for the owners, operators, and sponsors of CRE properties. It originates senior mortgage loans, subordinate debt products, mezzanine loans, real estate preferred equity investments, and other CRE investments, including commercial mortgage-backed securities. Analyst rating consensus gives this stock a moderate buy rating, with a possible 2.49% upside. This company has a growing loan portfolio consisting of $2.4 billion, which is a 33% year-over-year portfolio growth, which makes it a 5th consecutive quarter of portfolio growth. The $2.4 billion is diversified across 72 active loans, which 99% are senior principal loans. Their portfolio is spread across the majority of the United States, with the most significant weight being within the Southwest area. At the end of last quarter, they had closed 16 new loans, all being 100% senior loans and 100% being a floating rate, with a total of $365 million committed to financing. They also have a history of increasing dividends per share, with the current quarterly dividend being 35 cents per share. This included a supplemental dividend of 2 cents per share, but without the bonus dividend, they have consistently been paying 33 cents per share. This makes sense, seeing that it has been trading in a predictable channel over the last 5 years, is between $13.50 to just touching the $16 level. The current dividend yield is 8.89%. The dividends are paid every quarter, the last being 35 cents per share, totaling $1.32 annually. These 4 dividend stocks provide a dividend yield of over 8%. Let me know what you think. Are you buying, have you invested, or looking at other high-yield dividend stocks? Let me know in the comments. I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. You have made it to the end of my video. Thank you for watching. Please check out my other videos and the description for great deals and sign-up bonuses.